The following is for entertainment purposes only. We are not financial advisors. We are not responsible for any losses, only the profits.
What's up, Octo Nation? It's Charlie. I'm going to be your host for today. Today we're taking a look at Haymaker Acquisition Corp. Y'all heard of them? HYAC is the ticker. This is a cool play that no one even talked about or heard about. The big thing is no one even heard about it. I didn't hear about it. None of people I'm talked to about any of this stuff even really heard about. Like, oh, what was that? Okay, this is something that totally slid under the radar. It's not really like something that's going to be a big hyper. Okay, there's no like super big technology thing that could change the world and all that. But I think this is a really good play, and I think we should at least be aware of it. And I think this is something that long term could be a huge gainer for you. You know, just keep in mind it's not something that is going to be super hyped unless they get a random celebrity endorsement or something. Then it might. Okay, we'll take a look at it. So ARKO Holdings Limited and GPM Investments LLC announced the business combination. The blank check company Haymaker Acquisition Corp. said Wednesday in an agreement to merge with Israeli holding company ARKO Holdings Limited in a deal with a pro forma enterprise value of $2 billion. That's a big SPAC, right? $2 billion. ARKO is parent to GPM, the seventh biggest convenience store chain in the United States, with 1,393 locations as of June 30th in 23 states, mostly the east side of the United States. The company has three segments: retail, which consists of fuel and merchandise sales to a retail customer base; wholesale, which supplies fuel to third parties; and GPM Petroleum, which supplies fuel to company stores, sub-wholesalers, and bulk purchasers. The new entity will trade on the NASDAQ under the ticker ARKO, ARKO. The deal is expected to close in the fourth quarter. Haymaker shares went up a little sliver. So I kind of like this because this is kind of like owning the whole moat of the business. You get the fuel, you're giving fuel to other guys, you have your own convenience stores, you have the retail side of it. This is off their investor presentation here. You can see they've got tons of different brands that they deal with. Okay, so they'll even go to existing gas stations, just buy them out. They try to find the ones that are like kind of gross and need a remodel, a facelift, or they look at it and like, wow, they don't even have any food here. And like, we could add on a Dunkin' Donuts and a Subway on this side and a Taco Bell right in the middle. You know, whatever you want to do. They look at that, they'll buy it, and they'll remodel it, and then just juice everything right up, right? Clean everything up. So like this one here, this is a shell. It's got a Subway and a Dunkin' Donuts on the side. You know, they go like towards the higher end of the gas station spectrum, not just buying little nasty ones that are super dirty and creepy and no one wants to go to anyway, and just leaving them like that. They're trying to amp them up, all right? I like this play. So like I said, they're the seventh largest in the convenience store operators in the world. 7-Eleven is number one, of course. There are big followers in this segment though too, right? Like there's a couple stocks that have kind of shown just like a nice 40, maybe like 30-degree angle. You know, it's taken them 5 years or something to keep going, but you know, a lot of those have like a billion shares. Like one of this is called like Koch product or something like that. That thing, I looked that up and it had like 1 point something billion shares. This thing has only got 50 million shares, okay? So that's the other reason I like SPACs, is because they're volatile. A lot of it is because the float. There's hardly any shares on it. There's only 50 million, you know? So they got tons of room to grow. Like I said, we're looking at almost up to 2 billion, 2.1 billion, okay, pro forma. Yeah, that's crazy. Here's some of their brands. I haven't heard of most of these because they're mostly on the East Coast. The centralized Lil Cricket, ARKO, Breadbox, Apple Market, Shortstop, Admiral, Easy Mart, Stop One. Y'all been into these? Fast Mart. So this is kind of showing like what they did. They got Fast Mart fuel and they converted it to a high-end mobile one, and you know, kept the brand of Fast Mart, but just amped it up and made it look all pretty. All right. They're also showing that they're doing stuff like private label expansion on essential items like high margin snacks and packaged beverages and post-pandemic essential items. So they've got like hand sanitizer, masks, you know, that type of stuff. They've got the loyalty program enhancement. They got like the fuel cards, programming, data-driven placement of top-selling SKUs across all categories with regional customization. They've got gaming introductions. So they're doing gaming machines like slot machines in Virginia. beginning July 1st of this year. Product mix optimization, mobile order curbside pickup. So rolling out mobile capabilities to 250 stores through DoorDash. I think that's smart because sometimes, people just need like some milk and a water and a Gatorade and a Snicker bar, right? Back smokes. I don't even know. Did they deliver that type of stuff? Beer? I don't even know. So popular promotions in tandem with loyalty program expansion. So they're doing like, events and all sorts of stuff, enhanced food services, donuts, and, just expanding it, making it a place to go and get more than just a Snicker bar and gas, right? They're showing, the presentation they have for this is huge. It's super long and there's so much information and it's really good. But if I were to go through it all, it would take like an hour and a half. So I'm just really skimming through it. All the financials look great. They're going up. They're showing that they were at like before this, they were at like 1 billion of fuel sales. And after this merger, they're going to be at 2.1 billion in fuel volume alone, which is massive. Okay. So that's over double their fuel sales. I like they're selling fuel to everyone else. And fuel is not really the place that a lot of investors think they want to be right now, but it might be a decent time to get into some sort of fuel play. But I like this one because you're getting the fuel play on gasoline, but then you're also getting the convenience store, the retail, all the other stuff they're doing in this, the loyalty cards, everything that comes with it. This is just showing that they're absolutely going to basically double the numbers. It looks like they're coming in and just grabbing stores. Like they got like 1,534. It looks like in 2020 alone. So they're just coming in and slicing them up, getting them. This is showing the enterprise value compared to the two biggest holdings, which is that Koch one and the Casey's something, and they're below. So they're only at 9x, and their other ones at 10.9 and 12. So just showing kind of the value of the stock itself, the value of where it's at, the transaction and all that. Everything's good to go. So what do you guys think on that? Do you think that this is something you might want to hang your hat on at night? I think this is definitely one of those like long-term hold things. Like if you got it now and you're like, dude, maybe I'll hold it for like 2 to 20 years or something. This is something that is going to continue to grow, I'm sure, and do very well for the long term. Is it ever going to go parabolic? I don't know. A lot of these SPACs towards the end of the mergers, they're getting kind of hyped, right? All of a sudden, like even the ones that have like meh targets that aren't like super cool, when it comes closer to merger, all of a sudden out of nowhere, they're just spiking up. They'll go up 20%, 25%, 30%. You're like, whoa, what is going on? And when they're getting closer, like FMCI and LCA and Shill and all that, dude, they can just go parabolic. Now, those did have a little bit more coolness and hype to them, I'd say. But still, like this thing is sitting literally at the floor at like $10 a share, right? So you're still getting in at like the bottom basement price. The only scary thing is after SPACs fully merge down the line at the end of the year or whatever, this still after that, then it can go below that floor. So just kind of keep that in mind and watch it. So if you wanted to, like you could get in now and just like if you have some savings money, instead of sitting in a savings account, you can just like throw it into this and just wait until close to merger and ride like a stop loss just in case when it converts that it might tank, which could happen. But most of these SPACs, like I was saying, do get some sort of write up towards close to ending. So I don't know. I like this one. I like this as a dumb parkable is what I call it. Just something that you could take and put in an account and just not even look at it for a couple years, and you'll probably make a ton of money. Maybe not a ton, but at least it'll gain a decent amount. So the Canoe had a business wannabe hype thing today. It still wasn't very good whatsoever, man. They need a CMO, a chief marketing officer, really, really bad, or the dude that's the CEO needs to step down and they need to get a new CEO. I think the CEO guy would be better, in like the, logistics, engineering stuff. I mean, you need a front-running salesman like, Nikola. As much hate as he's getting lately, look at his stock price, okay? Look at the deal he just got done for GM. I am definitely not in Nikola because, I see through that, but most folks don't, and that's why it's gone up. And now look at GM just paid him like $2 billion or something. You think GM couldn't have made their own what? I mean, he doesn't have anything, right? Like GM could have easily made a super truck that was super dope, I'm sure, for less than $2 billion, and I don't even think he's got much done in it anyway. So I don't know. Just think about that. I mean, just imagine if Canoe had the right hype guy behind it. I really think it would do good. Like if they got the right dude from San Francisco to even do it, or West Hollywood maybe. I don't know. I think things would be different. I still think it was a mistake launching that minivan bus thingy at first. It's cool. It's kind of like Apple when it first came out. Everyone's like, when they had the colored monitors, colored computers, people were like, it's a little bit too hippie for me, man. And it wasn't until they got rid of the hippie computers and they started building just stuff to really compete solely with Windows that it got bigger. But regardless, they still would have been better off coming with that four-door electric sedan that just worked and did awesome and was way lower price, half the price of a Tesla. Good performance. That would have sold, right? But I think that was their biggest problem. One thing that they did say, they didn't release too much, but I did grab a couple things. They did talk about the last mile delivery and their understanding and seeing and watching the hype involved and seen around the whole market. Okay, and they're paying attention to that, and they want us to know that, okay, that they are paying attention on that. And so, like companies like Workhorse and all the other ones, okay, but mainly, I'm sure it's Workhorse they're talking about. Could be Green Power too, Green Power, right? But they were talking that is getting pushed toward the front. Okay, so the four-door car, like we were saying, and the last mile delivery, they said under 2 years. I think it said about 18 months they're going to try to do the last mile delivery truck. And I think their last mile delivery truck is going to be super sick. I think a lot of companies would love to have that. They also said there's going to be many new announcements by the end of the year as for new vehicles and pricing. As for pricing, they were asked about that, and he basically said that loosely it will be comparable to other leases out there, whatever that means. It really means nothing, because before that they were even talking about how there's going to be no money down, right? So this is going to be the other hard sell on it, because leases are sold by the payment. Yeah. So you ever see the BMW or the Mercedes commercial near Christmas for, they put a red bow on the silver Mercedes and it's driving through the dusty, snowy road or whatever, and then they're like, you can have this for 18 months at only $3.99 a month or $5.99 a month, a simple low price of. And then after that, so you get sold on that, and Miss Smith goes, I can have that, honey, come look, right? But after that, you can see in the fine print that is with like 8,000 do it signing, but they just put a really small 8,000 do it signing. These guys, again, they don't understand sales very well, and they're not talking about that at all, and they're saying we're not gonna require a down. But the problem is just like today, they didn't talk about the pricing per month because they know it's going to come in higher than what they want it to be, because they're afraid people are going to see the monthly price and kind of run away. I think that's what's going on, because they're not going to require something down. People are just going to focus on the monthly payment because that's all people see anymore, right? Well, how much can I afford a month? Okay. I don't know. I think they need to restructure that too. They need to offer, if you want to put down 5Gs, then we'll get it to like 200 a month or 300 or 400, whatever, and look at it that way. But regardless, again, as long as they can segue into that four-door thing real fast and then into the last mile delivery stuff real fast, I think they'll be fine. But they kind of need to move away from that van. They just do. They just do. It's going to have appeal like an Asian stuff, I think, and some cities in California and all that, but they need to focus on the meat of the market. Is where they need to get, and that's my thoughts on that. We're going to first take a look at HYC and then net. We got to take a look at net. I had a request for that. So this is the one I was just talking about. This came out, it was like $10. This is SPAC, the Haymaker acquisition. Around announcement, it went up to like $11.26. But it was like snap of a fingers straight back down. I don't know why it spiked again, but it did. But it still only went to like $11.15, and then now it's just been like riding like $10, like right at the floor basically. Gas station extravaganza, 50 million shares, Q4 merger. Let's look at Netty. Remember the electric car company video I did this weekend on the Mullen vehicles? All right, let's take a look at the stock here. So what is going on? So, it got announced they're bringing Mullen in. came up this additional ride. People, the puppeteers took their profits, came down. The hype train went, and then it's just it tanked with the rest of the market here. Which is expected. And then I think kind of a lot of charts look pretty much the same right now because of what the SPY and the QQQ are doing. This still does look like it's sitting at that kind of that floor that we drew in here. Let's go ahead and make it red now because whatever. It's fine there because it's basically sitting right there at the 620-ish. We're using it here. As long as it doesn't break too far below this, we're going to be fine. It's still sitting technically in a bull flag. It kind of did break out of it, but it had a little run today, but just like everything today, it kind of went up, and then the market said, oh, coming back down. So the big question is, are we going to be headed way down south? What do you think? Let's take a look at Workhorse since we're here. Well, this has still held its ground actually pretty darn tight. Okay, we had this massive run up starting the 4th. So is that Monday, I guess? Or Friday? Yeah, okay. And then we've held it pretty well. Look at that. For the volatility we even had today, it's not doing too bad. Not doing too bad. Let's look at the big cap stuff still kind of going down. It all actually opened up pretty high, but by the end of the day, everything kind of just went back down a little bit. Let's take a look at the SPY. So this sucked because it went below the all-time highs today. We actually had a little rally, and then it just started to tank it down, man. After hours, it went up just a hair, but you can see where we're sitting here. It basically came down and tagged this same line that we hit, at the end of the downward rally up. Was it like on Wednesday or whatever? Let's throw us another line in there because now that we've tagged it a couple times, even though it's so close, we should be aware. We just need to keep above that. Thesis still states, it could still go, another 2.5% below that, where it went today, which would be down, to about 323-ish. But we can still measure this from back in around June 10th. We actually went down 8.65%. And so far, we've only gone down like 7.1%. So that's where we're getting at. We could easily still go down another 1.5%. That'd be a really bad way to end of the week, but because then Monday's gonna be like, what are we doing? But of course, I want to see a rally tomorrow. That'd be fantastic. But just keep that in mind. Keep these lines in front of you. You guys see any more that we're missing? I mean, there still could be another one here at like 327 possibly. Yeah, because we've got a gap there. Let's throw that in. See this gap right here? See this gap when it gapped up around 327, and then you follow it back right here, and you've got all these lines. Let's throw in another red one there. Throw that across. So watch that. If it could go down. If it breaks this 335-ish, it could be heading to 326. And at that point, you watch that video. What do you do in a down market? You want to protect yourself. You want to pull out some cash, and you want to put it into the inverse ETF, so you can get like the opposite of the QQQ or the opposite of the SPY, and it'll 3x it. So if it's going down, you can 3x going down. It's a good way to hedge if you want to do that. A simple way to hedge. The QQQ, I'm guessing it's the same. Yep, looks exactly the same as a SPY. We've got this kind of like double tap here at the bottom, and yep, we have a line that ran right across it too at 270. We could still go down to 267, but I don't know. Watch it. This one's gone up a tiny bit after hours too. This is technically hard to give any exact pattern of what's going on over here because it's so crazy looking. We're still sitting below the averages, like the daily, like the 20, the 50, the 100, and 200. So we're technically definitely in a bull market. Even the simple moving average, we're way below that now. So we're definitely in a bull market until we get confirmation above any of those. I wouldn't be buying anything unless it was to hedge and protect yourself of something going down. you know, so just be careful. All right. We need to probably get back up to like where we were beginning of the day today or end of yesterday, around 278, before we get anywhere where you should be buying, because right now it's just too sketchy. All right, it's too slippery. So just protect yourself. Just said, act like that crocodile. Be slow, be steady. Pull some stuff out if you need to. All right, if you need to protect yourself, just do it. Just protect yourself, and it will all be good. Eventually, we'll be multiplying like crazy again. We're still doing it here and there, but just want you all to be safe, and we'll make it in the end. Okay. Other than that, not much else to talk about. TLT did a little jump up. The DXY, it went up a little bit today. It stayed under this line though at 93, which is good. So it got rejected there. So I don't know. We're still kind of in that wishy-washy state. Silver had its rally, but it kind of looked the same as this. It kind of went down again. So we'll just have to watch it. All right, any more plays y'all want me to take a look at, put them down in the comments. If you haven't liked or subscribed, make sure and do it. We try to put out these videos as much as possible. We got one on CleanSpark this morning too. If you haven't checked that out, go check it out. Thanks everyone, and have a great day.